All right, now we're going to start focusing on some governmental activities. Okay, so I'm going to turn this video off and switch over to this. So, governmental activities. Remember, we had our budgetary activities, and we always wanted to keep those in the same lane. And then we had encumbrances, and always keep those in the same lane. And then actual activities, keep those in the same lane. And so we're going to just kind of look at different types of activities. Obviously, there's a million activities that a government can take part in. So this is a little bit high level, and this PowerPoint's available in the in Brightspace. So, I mean, some of it we'll go over and look at specifically. We'll do some practice problems. Other parts of it, I'll just let you kind of go through and kind of see how those transactions work. Okay. All right. So first off, focusing on different types of revenues. Okay. So four broad categories. So imposed non-exchange revenues. Okay. So so basically these two here are related to taxes. Okay. This one, derived tax revenue, there has to be some underlying transaction. Okay. So think about you go buy something at the store, sales tax is charged. The tax is a derived tax because it's derived from that sale. Or income taxes, you're paid a wage and then part of that or that wage is taxed. And so the tax is derived from those income taxes. Okay. Imposed, on the other hand, they're not derived from an underlying transaction. Instead, I don't know, I guess in the case of property taxes, like you already own the property and, I mean, all taxes are imposed, right? And then taxes, I mean, it's a non-exchange transaction. You're not giving up the tax in and expecting something of equal value in return, right? So I I pay property taxes and I have a lot of kids, so I'm receiving a lot of benefit, right? But maybe an elderly couple or college students don't have kids, possibly, and they're still paying property taxes, even if they're renting. The landlord is paying property taxes, and so they have to have the rent at a certain level to cover the property taxes too. So, college student paying rent, part of that is going to property taxes. They don't have kids in the school system, and so they're not receiving something in exchange for their taxes. But I guess kind of just realize the two differences between these. So imposed on exchange, think of property taxes, fines, penalties. Derived tax revenue is derived from some underlying transaction. Okay. Now these two here, think of these as different uh, two different types of grants. Okay. So that's another source of revenue for a governmental entity. Government mandated would be that some other government basically imposes, tells us we need to do something, but they also provide the money to do it. Okay, so like environmental cleanup or some type of project where we're receiving grant funding and it's mandated that we perform that project, whatever it is. Okay, now these grants are almost always on a reimbursement basis. Okay, so think about reimbursement just means reimbursement that we're going to do the work. Once we do the work, then we recognize the revenue and they pay us. Okay. So government mandated, basically they're imposing it on us, telling us we need to, one other government is imposing it on us. So think of like city of Kirksville is being mandated by the state or by the federal government to do something, work on their storm drain system or something like that. And they're receiving grant funds to do it. Okay. Voluntary, on the other hand, is where we apply for the grant or it's a competitive grant and we want to receive that money. Again, though, typically they're going to be reimbursements. They're going to be restricted for specific purposes, and therefore we recognize the revenue when we've met the restrictions. Okay, that's the key to those. Okay, the key on taxes is we recognize the revenue when it's measurable and available. Therefore, if we expect to collect it within the current year plus 60 days, then we can recognize the revenue. Okay. Dual track approach is just talking about how this textbook approaches this. Remember, we have governmental entries that are in our governmental funds. And so like your general fund, your debt service fund, those are using modified accrual accounting. You would also have journal entries, though, that you complete at the government-wide level. Actually, I'll post, there's kind of I have a sheet that has a whole bunch of different journal entries, and it shows at the fund level and at the government-wide level, the journal entries. So, yeah, so I'll probably post that too. Okay, so let's look at this real quick. Some practice problems. Chase City imposes a 2% tax on hotel charges. Revenues from this tax will be used to promote tourism in the city. Chase should record this tax as what type of non-exchange transaction? Okay, so because there's this underlying thing, people are staying at the hotels, therefore it would be derived. And then also another important, it doesn't ask this, but this would be accounted for in the special revenues fund, right? Because it's a revenue specifically to promote tourism in the city. Okay, property taxes. Property taxes and fine represent which of the following classes of non-exchange transactions? So this one is imposed, right? Okay. The only thing that all taxes are imposed, right? It's just whether or not they're derived from some underlying transaction or not, right? Voluntary would only be revenue from grants that we applied for. What is the major difference between an exchange transaction and a non-exchange transaction? Okay, so I just think of this as an exchange transaction. I'm giving up something of value, typically money, and in return, I'm receiving something of value. So whatever it is, lunch or something like that. Okay, so we're looking for something that kind of captures that concept, whether the resources acquired can be further exchanged. Now, there we go. Relationship between the amount of value given and the amount received. Okay. These journal entries here, you can see that this must be in the general fund because it's using the terminology expenditures instead of expenses, and then it's also using due to federal government, due to state government, whereas in governmental activities, so that's at the government-wide level, we debit expense, salaries payable, and then we don't end up recording this due to. So when we pay it, I think you can look through that and see things that you need to see there. Property taxes. So when we levy the taxes, we get to record our revenues. So we have tax receivable current, credit revenues, and then if there's any estimate for uncollectible accounts, we put that in as an allowance account. And then when we collect them, we increase our cash, reduce our receivable. If they're delinquent, we reduce down this asset account here, this tax receivable current account. So we credit it to reduce it, and then debit tax receivable delinquent or non-current. And then with the allowance account, we also just do the opposite too, reduce down allowance for uncollectible accounts current and increase allowance for uncollectible accounts delinquent. And then we also reduce down our revenues, because now remember our rule for revenues under modified accrual is that it has to be measurable and available. So because now we don't think we're going to collect it within the current year plus 60 days, we reduce the revenues and then we credit deferred inflows, which I need to do a video on deferred outflows and deferred inflows. But just think of this as like deferred revenue for now, at least, until I can do a video on it. Okay. Or really the way I think of it always is I say, okay, if it's a credit, it's deferred inflows. If it's a debit, I'm debiting deferred outflows. A deferred inflow is similar to a liability. Okay. Interest and penalties on delinquent taxes, I'm not so worried about that. I don't see that they test this very much. So write-offs, also not too worried about that. You can skim it, kind of look through the journal entries, but yeah. General revenues or sales tax, income tax. So those are the big areas. Program revenues are listed separately, but typically relatively small amounts in comparison to our general revenues. Tax anticipation notes. This is just where the government borrows money. The inflows of money for a government are cyclical, right? Like right now, governments are collecting property tax and stuff like that. So a lot of money is coming in, but other times of the year it's not. So tax anticipation notes just kind of help a government with their cash flow needs, their short-term borrowings. So therefore we would record it in a governmental fund because it's not a long-term liability. So we receive cash, credit, tax anticipation notes payable. Okay, so you can look through that. You can read through this. Again, this isn't necessarily areas that I feel like are super heavy tested. Okay, this is tested some. So purchasing supplies, okay, two different methods that we can keep track of this. We can either use the purchase method or the consumption method. Consumption method is going to be much more familiar. That's what we would do under accrual basis accounting. Purchase method, kind of more similar to like a cash basis. So if you look at it, here's our journal entries. Under the purchase method, you record the expenditure right up front when you buy the supplies, even though you haven't used them up, and then either credit, vouchers payable, or cash. And then when the supplies are used up, there is no entry. But at the end of the period, we count how much supplies are left, and then we increase our supplies account and record a non-spendable fund balance. So we increase our fund balance, but it's non-spendable. Under the consumption method, we use an inventory account. We increase it, credit, cash, or vouchers payable. And then when we use up the supplies, when we use the supplies, we record an expenditure for using the supplies and reduce down the inventory. Okay, so just be aware of that. These topics here, you can read through, again, I don't feel like heavily tested. Same here. Well, we can look at this real quick. So we're going to have a separate column for our general fund. Most of the time, could have separate financial statements or general fund or other funds, but it's not required. And then governmental fund financial statements. This is important. So balance sheet, statement of revenues, expenditures, and changes in fund balance, or budgetary comparison statement. But you need to know, like, hey, we're going to have a balance sheet for our governmental funds. We're going to have kind of like an income statement, but it's statement of revenues, expenditures, and fund balance. So special revenue, I think I've talked about this enough. The special revenue fund is used when the taxes are restricted or committed for a specific purpose. Yeah, and obviously when those funds, they wouldn't be proprietary or fiduciary funds. They'd be for the general government. Grants. Yeah, so we don't recognize revenue until we have the qualifying expenditures, like once those have been incurred. So get there. Nothing there really. Interfund activities. So a loan, that's when we expect to be repaid. So if it's expected to be paid during the current year, then it's current. For loans, we don't record anything at the government-wide level. Because think about it, we're just loaning it to ourselves. So if it's between two governmental funds or between two enterprise funds, it's not reported at government-wide level. Interfund transfers, one fund sends money to the other without expecting to be repaid. So that would be other financing, like uses from one fund and sources that the other fund. Intra versus inter activity. So intra means within, so like within governmental funds, so between two governmental funds. So we're not going to report it government wide. Inter, it occurs between a governmental fund and an enterprise fund, and reported as internal balances on government-wide statement of net position and transfers and statement of activities. Okay. Oops, this is showing the answers, but so following information pertains to Grove City's interfund receivables and payables, December 31st, year one. In Grove's special revenue fund balance sheet at December 31st, year one, how should these interfund amounts be reported? So special revenue fund, how are these things? Okay, so due to the special revenue fund, therefore that's going to be an asset. And then due to the custodial fund from the special revenue fund, that's going to be a liability. And so, okay, for which of the following funds do interfund transfers affect the results of operations in their fund financial statements? Which of the following funds do interfund transfers affect the results of operations? Okay, so governmental funds, yes. Proprietary funds, yes. So that's inter, right? It's not intra. Inter, and so those would impact. Chase City uses an internal service fund for its central motor pool. The assets and liabilities account balances for this fund that are not eliminated normally should be reported in a government-wide statement of net position. Okay, so basically this is, the government paying or getting charged. So you have the government and then the internal service fund, which is the government itself, right? It's billing, charging itself. So that's going to happen. It's going to show up under the governmental activities. In preparing government-wide financial statements for a governmental entity, interfund receivables and payables between governmental and enterprise funds should be. We just read almost those exact same word reported as internal balances. This is showing a statement of activities. So that's at the government-wide level. You can see the format is a little different here. So we're going to list our expenses first. Then we're going to record our program revenues. Okay. And our expenses. And then down here, we're going to see our general revenues. So these are going to be big dollar items: property taxes, franchise taxes. And then after your general revenues, then you list your special items. Oops. Oh, I know. This is talking about something a little different than I was thinking. So, but a special item is unusual or infrequent, but within a government's control. Can't remember if I've talked with you guys about that. But transfers, you can see, transfers, we have, a positive amount here, but a negative amount here, and they offset each other. You can read through that on your own. Perfect. Okay. I think that's enough time on that. So thank you for watching. I'll get some more problems posted that you can go through, and I can see how you're doing. Okay. Thank you.